Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing precisely on the pound. Now, these are hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is starting to reject a quite strong level of previous monthly support, which was acting as support here, and again here, which now that the market has once again tested it and started to reject it to the upside, we could expect the market to continue to reject it to the upside and create more bullish price action away from this historical structure support zone. So by looking at the market from a monthly perspective, we could expect more bullish price action to be developed. Dropping down on the weekly, however, what we can see is that from a weekly perspective, even though the market is currently testing the previous weekly high, and this is previous weekly resistance here, again here, now that the market has broken it to the upside, this previous weekly resistance is supposed to be acting as support. Now, it seems like the market is managing to break below it. However, it is currently still acting as support, and it will continue to act as support unless we will see a weekly close below the zone. However, for this entire week, it will continue to act as support because a break to the downside is only confirmed if the market creates a weekly close below this zone. So from a weekly perspective, at the moment we have support at this zone, and we could expect bullish price action to be created away from this area. Going down on the daily time frame, things become quite clear. It is easy to understand here on the daily that the market is currently in a range. We have the bottom of the range here, and we have the top of the range here. Now, obviously, the top of the range is currently acting as resistance, and the bottom of the range is currently acting as support. We can see here how the market has already respected this top twice, and here at the bottom, the market has already respected the bottom of this range 3 times. Now, until the market will remain in between this resistance and support, we cannot be looking for anything interesting because essentially we have a range-bound market. And until the market will remain bounded in between this resistance and support, we could expect more horizontal price action and the market essentially to remain in this rectangle. However, if we will see a break above or below the zone, which definitely should happen, at that point, things would become very interesting. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound, we have to first of all keep in mind that if we're checking the data for the GBP, we are actually already checking GBPUSD because all currencies on the spot are traded against the USD. So if we're checking the data for the GBP, we are already checking GBPUSD. And what we can see here is that net positions went from having minus 24k net positioning from an institutional perspective on GBPUSD all the way up to having plus 1.3k net positions. This means that we went from having more shorts than longs all the way up to now having more longs than shorts from an institutional perspective on the pound, making it stronger. So as GBPUSD is getting stronger, we could expect a potential break away from the high of this range. Now, what we have to keep in mind is that the best probabilities in the market come when all the directional timeframes are showing the same direction. Now, the directional timeframes are monthly, weekly, and daily. So only if the market here from a daily perspective would manage to break above this high, only at that point this previous daily resistance would become support. So if we get a break above this daily resistance, at that point after the break on the retest of this previous daily resistance turn support, that is when we would have the best probabilities. We don't know if we will get this break because the market could easily either remain in this range or break below. And in that case, we have to reassess the structure of the market. But what we know is that if the market manages to break above the high, that is where we will have the best probabilities, because all time frames, so monthly, weekly, and daily, from a directional perspective, would be pointing to more bullish price action to be developed. And on top of that, we would also have the commitment of traders, so the institutional positioning, aligned with this bullish outlook. So if we do get the break on the retest, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, as we said previously, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to only $97, plus totally optional, so it's an option. If you join Blueberry Markets from your student dashboard after you join the mentorship program and you open a trading account with them, you can get a full refund credited back into your trading account. And if you scroll over here, you will see that there is still time to join before the offer expires and the timer goes to 0. And directly from here, you can join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.